Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening and welcome to yet another Smartkarma weekly forum. The forum is a high-impact weekly live webinar exclusive for Smartkarma Plus subscribers. We use the forum to discuss some of the best, highest conviction ideas and insights surfaced across the Smartkarma network. A note of disclaimer from our side: the forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our esteemed insight providers. And lastly, Chatham House rule applies. Please do not share any of this information on social media without our express permission. Quick look at where we left it last week. We took the opportunity to discuss BFI Finance. This is a very promising non-bank finance company in Indonesia. It happens to be the largest such listed company. The stock has held up extremely well despite turbulent markets, almost trading close to its all-time highs, and we think it's got a long way to go still. We then took a look at global consumer staples, especially given allocations are at rock bottom and we are staring at a potential recession in the coming months. And third, we inspected the Ukraine crisis from a different lens. We took a look at how it might impact the semiconductor supply chain with a very special focus on the noble gases such as neon. One important reminder: recordings of past forums are available on our YouTube channel. This is called Smartkarma Plus Weekly Forum. You can look at these at your own time and pace, and you can also share these with your friends to discuss ideas in more detail. Today, we will look at these 3 ideas. We'll kick off with Keepers Holdings in Philippines, move on to Grab, which is a relatively recently listed tech unicorn from Southeast Asia, especially Singapore. And then we will move our attention to what is probably the biggest macro question ahead of us, which is Stagflation 2022. A reminder, you can send in your questions at any time using the Q&A button on your Zoom application. But if you prefer, you can also post discussions on the platform and analysts can respond to you directly. All right, so let's kick off with Keepers Holding. The ticker is KEEPR space PM. This is a small cap. The market cap is around $360 million US. This stock is covered by Samir Taneja on the platform. Samir has had a very illustrious career on the buy side, and now he runs his independent research firm called Investix Insights. What you see on the chart on the right-hand side deserves a little bit of explanation. So Keepers is not a stock that has fallen as dramatically as this chart reflects. In fact, Keepers was a backdoor injection. So all the way until this line, this big precipitous drop, is the shell company. So none of this history really matters. And the story has only commenced from where you see that little green circle. So it's very, very early days. And let me run you through the thesis. So first things first, what is Keepers? Keepers is a holding company of Lucio Group. It is the largest distributor of imported spirits in the Philippines. Now, the Philippines market has historically been dominated by local brands. Roughly 500 million cases are sold every year of alcohol in the whole country, of which imported spirits are only 5 million. So it's a very, very small base. However, as the second bullet point says, this premium imported spirits market is growing extremely fast. The projected growth is at 11%, but actually in the last few years, it's grown at a much, much higher clip. Keepers dominates this market. It controls nearly 75% of the entire imported spirits market of Philippines. Now, as a result, its portfolio of brands is very vast. It's very diversified. Any real imported liquor that you can think of, whether it's the Glenfiddich or the Johnny Walkers or the Diageo group of brands, Keepers has them all. And its contracts with these big brands are exclusive in nature as well. Now, it's very important to understand why does Keeper have such a stronghold in the market. The reason is that Keepers is an affiliate company. It's a sister company of the Lucio Group, as I mentioned. The Lucio Group also own Pure Gold, which is the largest hypermarket, and SNR, which is the duty-free retailer in Philippines. So when they go and negotiate deals with these big liquor brands, they can provide the sort of distribution that nobody else can. And as a result, they not only secure these brands, but they also get highly attractive exclusive contracts with them. Now, Keepers only got listed a few months ago. It got listed through a process that's called a re-IPO in the Philippines market. It got listed at a share price of $1.50. Go back at $1.50. And as you can see, it's trading below that price. So it's trading at about $1.27. Now, what is very, very exciting is that the stock is trading at, well, less than 10 times this year's PE. And as you guys know, the earnings has been very, very depressed because of COVID. So not only are you going to see extremely high earnings growth, somewhere in the region of 48 to 50% year on year, but you can easily see the share price valuation multiple climb from 10 times to over 20 times. There's a very, very long addressable market and runway for the business here. And over time, we think this will become one of the best consumer staple names in Philippines. Also, compared to some of the local manufactured brands, this business will be less hurt by inflation, and they are targeting really the affluent market in Philippines where there is relative price inelasticity. I'll move on to the next idea now. Again, feel free to ask any questions if you have, or you can post discussions on the platform. So the second idea we're exploring today is Grab. Grab was listed a few months back, towards the end of the year, last year, via a SPAC listing in the US. The share price has been on a downward trend. It's fallen all the way down to the $3 something mark from a de-SPAC level of about $10. The market cap is now sub $20 billion. Now, this is a name that we really, really disliked going into the listing. I think we've discussed it several times during the forum as well. Now, where do things stand at the moment, given that share price is down nearly 70%? So first of all, just in case you don't know Grab is positioned as a super app in Singapore and a few other Southeast Asian markets. It does food delivery, it provides ride sharing, and it's also entered the fintech scene through GrabPay, which is a payments application. Now, the reason the stock is on its knees even now is because the latest results were very ugly. The adjusted EBITDA for the fourth quarter was negative $305 million. Consensus was expecting negative 200. And a year ago, just to give you some context, adjusted EBITDA was just 100 million negative. So losses have almost tripled. And this is happening at a time when the market is on a recovery path. So what this means is that investors are really struggling to see a path to profitability. And these sorts of unexpected huge incentives raise more questions than answers. We also feel that the launch of a digibank in Singapore near term is potentially going to add more pressure on earnings in the short term. So what does Grab have going for it? It's got a dominant position, it's got a good consumer franchise, it's got some brand value, and what it's severely lacking is a visible path to profitability. And in this market, that can be punished quite severely. Also to note, there is a very, very large group of pre-IPO investors in it. And I think every opportunity that they get, they would want to exit the position. So there could be several rounds of sell downs in the stock, secondary sell downs. Now with that, I'll come to the third and final topic of discussion today, which is Stagflation 2022. This is a thematic idea. I really want to highlight Michael J. Howell, who is the founding partner of Cross-Border Capital. He's one of the world's most renowned liquidity strategists. In fact, he has a PhD in liquidity, and he used to be the global liquidity strategist for Citigroup before starting Cross-Border Capital. Michael and his team study liquidity patterns around the world very closely, and they use liquidity to foretell the rise and fall in asset values. It's a great way to predict which markets are going to go up or down. So what's Michael talking about here? We're all talking about inflation and Russia and Ukraine. That's been front and center. But Michael's saying that the bigger problem for markets right now is severely tightening liquidity everywhere. And broadly, we can summarize the three big headwinds as follows. Number one, economic momentum is now fading fast, which means growth everywhere is slipping. And you can see that on the right-hand side chart. Secondly, world central banks, and especially the US Fed, have turned decidedly cautious. That is resulting in shrinking liquidity. I think this week is going to be the last open market operation by the Fed. So it's really the end of QE. And third, people are pointing towards China and China easing as sort of, a big central bank that is still easing. However, Michael quantifies that what we're seeing in China is a move from a tightened mode to a stable mode, but not from a tightened to a growth mode. So China is very cognizant of its exuberant property market, and it is not flooding the market just yet. So in all likelihood, we are going to see a very difficult market environment where you will see a combination of falling growth and high inflation, or as it's commonly called, stagflation. The good news here is that such recessionary conditions will quickly arrest the current inflation fears. So what we are seeing right now, the panic in the market from inflation, will definitely subside. And that will also likely lead policymakers to take a step back. So what we are seeing in the market right now is potentially peak hawkishness and peak inflation pricing. Over the course of the year, we think the trajectory is going to underwhelm. So with that, I am at the end of today's presentation. I do not see any questions yet. Maybe I'll wait for another 10-15 seconds if anyone's got any questions. Otherwise, as I mentioned, you can post them as discussions on the platform and analysts can tackle them directly there. I think with that, I'm going to bid adieu and we will speak next week. Take care, everyone. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.